Hey, how's it going everyone? Welcome back to another PrimeXBT leverage trading video. I'm excited to bring another one to you guys. Quick shout out to PrimeXBT for a great platform. I do use them mainly for trading BTC. I love trading Bitcoin on there. If you trade a certain amount of volume, you actually get a 50% reduction in your trading fees, which is really nice. Not only that, for you guys, if you sign up and use the code Gooner, you can get a 50% deposit bonus on however much BTC you deposit up to 1 Bitcoin. So that's a really great feature that they've given me through partnership, and I really hope you guys enjoy that. Today, the topic is how to long and short, or when to long and short. All right. A lot of people like to chase, and that's not how you do it if you want to be successful leverage trading. I'm going to show you guys how I like to long and short to maximize my risk potential and increase my risk management. Here we have the Bitcoin chart. I have it pulled up on a 1 hour. I do most of my leverage trading on low time frames anyway. But basically, a lot of people like to FOMO the top with leverage. All right, this is not where you should be buying with leverage. This is not where you should be shorting with leverage. Okay, now that we got that out of the way, let's talk about when the best time to long and short is. So, short resistance, long support. All right, and basically what I mean by that is I'm just going to zoom out real quick, and let's just say this is a resistance. Okay, I'm going to turn it red, and you can see here that it's logical to short this resistance. All right, it would have worked out every time so far. Also remember that wicks don't matter, and you should wait for the candle close. That is a very large wick. This candle would have looked nice and big and green for a little bit. You can see how that worked out. All right, so then if we zoom out, you can see that we have a bunch of support down here. So you should not be shorting this. We're going to turn this green. All right, so why would I be shorting this support here? All right, after prices drop from resistance, drop down to support, it's a lot riskier to short. Now, after price breaks below this, this is turned into a resistance, right? And this is just a very simple concept here. Now you can see this breaks down, price turns into resistance. Now I have a lot better risk to reward opportunity here and potential for this to fall. All right, because if I'm shorting up here, all right, if I'm shorting here when price is still above this, you can see that price has the potential to push all the way back up here to this support. So my stop loss has to be much wider, and my stop loss would have to be, over 4%. Whereas if I'm shorting down here, all right, the next resistance is immediately above, so my stop loss could be less than 1%. So that's a very simple breakdown of checking for supports and resistances. All right, and actually what you can do is you can go to the higher time frames and then go down to lower time frames and really look for your entry. All right, look for these entries here at these resistances. You can use indicators for bullish or bearish divergence. So you would be looking for bearish divergence at resistance and bullish divergence at support. So if your price is going up here and making a higher high, but the indicator you have on your chart, let's say RSI or OBV, is making a lower high, all right, something like this, then that could be potentially good confluence for a short there and a very good risk to reward opportunity. All right, vice versa. On the other end here, if your price is making a lower low and your indicator is making a higher low, something like this, then that could be good confluence for a long at support. All right, and at this point, we would turn this green. I always turn my supports green and my resistance is red. It's very good visually, and it helps you just see where you're trading at. And if this is green and I'm looking for a short here and price is down here, I should probably take a break, step back, and say, okay, this is support. Why do I want to short support? Why are my emotions telling me to short at support? I shouldn't be doing that. So that's just one simple concept, you guys. Let's go into another concept, because a lot of people try to knife catch on the way down with leverage and long, and they get stopped out multiple times, and vice versa on the way up with shorting. What you can see here is that price is breaking down, and it's very tempting for people to try to long and to try to knife catch, and they might long down here and price bounces and they think they're a genius, and then it just breaks down and stops them out or liquidates them or whatever, and then they try again here and they're stopped out, and it breaks down, and they try again here and they're stopped out again. right? And at this point, you've taken a ton of losses and you're like, okay, well, I'm done. And then price bounces. So rather than knife catching, how can I wait for confirmation and be patient and try to really catch a good trade? What you can see here is that we drop and we make a higher low. So I could potentially take an entry here. Now I have to be concerned about this because first off, the first bounce is usually iffy and even the second bounce is usually iffy. So this I would say is the first bounce and this is the second bounce. But what you can see here is that this is a low here. All right, so price dropped and made a low, and it bounced and made a higher low. So when I see this happening, all right, in this situation, I would consider an entry here. So I could take a long here on this hold, and I would probably put my stop loss below this wick, all right? But that's for another video. I will do a stop loss video eventually. And then I would probably target, this breakdown area at first. So my risk to reward is good here. It's a 0.5 risk and almost 2% reward. Great risk to reward. Anyway, what I would do is understanding that I did wait for some confirmation. I didn't just knife catch, all right? And I didn't FOMO in on a bounce here. I waited for this to hold. I got in as this candle looked bullish and closed, so maybe I got in a little bit higher even. Still gives me a good risk to reward. But I do know that the potential here is we just saw a mega breakdown and we're pushing, but we could still see more mega breakdown. So likely for me, I would start trailing a stop loss on this as I go into profit and maybe take some profit, especially once I see this rejection, and I would consider just closing that altogether at some point up here, especially after that rejection and getting out and hopefully making some sort of profit out of this trade, sitting out and waiting for more confirmation there. All right. And you could see what happened is we ended up just making basically a bear flag here and breaking down. All right, pretty simple stuff. So then we break down here and we've started to develop more of a support base. But what I can't do is I can't buy here, all right, because this is knife catching, there's no confirmation. I can't buy here. Again, this is knife catching, there's no confirmation. Can I buy here? Yes, I can buy here. And why? Well, what did we just see? What did we see here? A higher low, right? All right, so what did we see here? A higher low. We break down. This ends up being a really massive stop hunt as well. And here, and then on this candle hold, right, I would consider that once we start to see this momentum, this is a nice, strong, bullish engulfing candle, making a higher low. And now I could consider an entry somewhere around here. All right, so let's say I get an entry here. My stop loss is going to be below this wick. And my target would probably be, again, this breakdown area for an initial target. So again, I have a 1% risk, 3% reward, very good risk to reward opportunity here. Much more confirmation once you get this hold here for a true higher low rather than just trying to knife catch on the way down. And if you don't understand what a higher low is, I will draw it over here for you real quick. Basically what that means is price is going down and then it bounces and it has to hold this level to maintain a higher low. If it breaks below, now we have a lower low, right? And in downtrends, you see series of lower lows, lower highs, lower low, lower high, lower low, lower high, right? That's what a downtrend is. In uptrends, now you start to see price make a higher low right here and another higher low and another higher low, and now it's making higher highs as well. So in uptrends, you're going to see higher high, higher low, higher high, higher low, so on and so forth. All right. That's how I would long. Well, how would I short then? Okay. How about we just look at the current price action here? Should I be shorting this? And if we're basing this answer off of my previous rationale, no. This would be knife catching. I don't have confirmation here, and I don't really have a clear idea of where I should put my stop loss. So it would be best for me to wait for some sort of breakdown, lower high, and then continuation down to enter a short here, which would give me a good risk to reward, all right, above this high down here, and a target of, first target of here, but I could even say probably around here would be a good target. So 1 risk, 3 reward, risk to reward again, that is another great risk to reward opportunity. When you start getting risk to rewards like this, 3 risk, 3 reward. Those are when you're going to have to say, okay, maybe I need to wait for a better entry or look at a different time frame. So let's look at a scenario that already happened so we can see exactly what I mean. So this again would be a risky area. Now maybe you have your confluence from bearish divergence, but you're still basically knife catching or inverse knife catching a short here as price is pushing up. So that would be risky unless maybe you go to lower time frames and you can find a higher low to short. But here what I see is I meant a lower high to short up here, by the way. Very easily misconstrued language there. But anyway, so now you see we have a lower low, right? Bam. And a lower high, which is kind of is a local higher high here. So if I really want to wait for confirmation, I can wait for this local lower high here to short. So we get a high, we drop, we get a lower high, and then we start to drop again. So this is where I could say, all right, this looks like a lower high, especially after this breakdown. So if I'm going to take a short position here, maybe I don't try to short up here necessarily, and I wait just for a little bit of drop to get in just to make sure that price actually wants to go downward. So you can see that I get a short here, and I could probably say somewhere around this support would be a good first target area. So what you see is a 0.7% risk and a 2.2% reward. Again, another basically 1 to 3 risk to reward there. Another great risk to reward opportunity. I'm waiting for confirmation. I'm not chasing down here because if I chase down here, look how much this widens my risk to 1.5%, and my reward is now 1.5%. So this is not a good entry for me with a leverage position to take. I need to wait for price to get back up here to reject and then to be able to take a position with a good risk to reward. The key to leverage trading, you guys, is waiting for confirmation and managing your risk. If you don't understand how to do this, you will fail because taking large losses is non-sustainable to leverage trading. So please, please, please make sure you understand all the ins and outs to leverage trading, how the exchange works, and things like that before you really get into it with real cash. Please check the rest of my videos in my PrimeXBT series if you want to learn more about risk management, and stay tuned for future videos like how to place stop losses, which will be coming soon. And please subscribe, like the video, and stay tuned for more updates. Cheers.